Hello everyone. In this video, I will share some useful tips and strategies to help you with your trading. If you find this video helpful, please give it a like and subscribe to the channel. Now, I'd like to review the USDJPY chart from the past few days and discuss the outlook for the future. Before we begin, let me explain two key points about my analysis method. The first point is multi-time frame analysis. To confirm the long-term trend, I start by analyzing the weekly chart, followed by the daily 4-hour and 1-hour charts. Checking the long-term trend is essential in trading. When making an entry, I also analyze the 15-minute and 5-minute charts. Additionally, I follow Dow Theory for my analysis. To briefly explain, an uptrend is defined by higher highs and higher lows, while a downtrend is defined by lower highs and lower lows. A trend reversal occurs when this pattern breaks. If the price breaks below the most recent low after reaching a high, a downtrend begins. Let's take a look at the USDJPY chart. First, we'll go over this week's price action. This is the weekly chart. This week, we had a bearish candlestick with almost no wicks, marking the third consecutive bearish week. The key point going forward is whether this downtrend will continue next week or if we'll see a rebound or some consolidation. Now here's the 1-hour chart. The yellow vertical line marks last Monday. As you can see, there wasn't much movement this week. It's been ranging overall. However, all the highs were consistently lower than the previous ones. This shows that downward pressure remains strong. If the price continues to fall, it could force traders who previously entered long positions around this area to exit with losses. This increases the possibility of the price dropping further, possibly down to the weekly support line. So the big question is, will the price continue to fall from here, or will we see a rebound? Either way, bearish momentum remains strong. Currently, we're also near the lower boundary of this descending channel. If the price drifts lower and then reacts upward when the weekly resistance line and channel bottom intersect, there's a possibility of a trend reversal. Now let's analyze the market from the weekly chart. This purple line marks the major support level. Since that line hasn't been broken and the price is still climbing above it, the weekly trend is technically still in an uptrend. However, since the correction has retraced deeply and failed to break above the previous high, we can infer that there's significant selling pressure. 3 consecutive bearish candles reinforce this view, and it looks likely that the price may continue falling until it reaches the support level. Based on the weekly time frame, there are 2 main possible scenarios: a 3-wave corrective move to the downside, or a trend reversal after finding support. Next, let's look at the daily chart. The market remains in a downtrend. This line marks the most recent lower high. The appearance of these 2 large bearish candles confirms that selling pressure is still strong and the downward trend remains intact. If the price starts to rise before hitting the weekly support level, I'll be looking for short opportunities. Moving on to the 4-hour chart, we're currently in a downtrend here too. I'm viewing the chart with this wave structure in mind. The most recent lower high has shifted downward compared to last week. Unless the price breaks above that level, the 4-hour trend is still bearish. In summary, there's no clear direction on the weekly chart. The daily chart is in a downtrend, and the 4-hour chart is also in a downtrend. We can also draw a descending channel like this. Although there was a slight breakout here, we saw a clear rejection, so the channel still seems valid. Keep in mind that wick lengths may differ depending on your broker, and traders may draw lines differently, so use the channel as a general guide rather than a hard rule. Now let's talk about next week's potential scenarios. First, from a bearish perspective. One possible move is that the market fills this space by forming a head and shoulders pattern. However, entering short from the current level is risky since the price has already fallen significantly and a correction could be near. If you want to enter a short position, it's safer to wait until the price returns, at least to the 4-hour lower high. Only consider entry after seeing a trend reversal on the lower timeframes. If the price breaks above that 4-hour resistance, keep an eye on the upper boundary of this channel and look for price action there. Also, see whether the previous resistance level acts as support. If it holds and price bounces, it may signal a potential bullish reversal. If not, monitor the lower timeframes carefully. Now from a bullish perspective. If you're considering a long entry, look for a reaction at the weekly resistance line. Be sure to confirm a trend reversal on the lower timeframes. At minimum, the 1-hour chart should show signs of a reversal before entering. You can also draw a downward trend line like this on the 1-hour chart. Ideally, wait for a breakout above that line before buying. Don't assume the price will automatically bounce there. Be prepared for a potential breakdown as well. Only enter if the lower time frame shows confirmation and you can manage your risk accordingly. How did you find today's analysis? If you found it helpful, please give it a thumbs up and subscribe to the channel. I hope your trades go smoothly and successfully. Best of luck.